Hey, good morning, guys. So, look, this one's a little bit different, right? This isn't just going to be about Bitcoin. This is just, I guess, more of an educational post, right? There's a lot of things that happen in these markets, and as a long-time trader, you see, over and over and over again. Come back to 2021, oh, Bitcoin's going to 135K and this, that, and the other, and we dropped to 15. Never again, glitch in the matrix, all this kind of bullshit. And ultimately, the market's changing, the market's evolving, right? And the market is always evolving. Things that happened before are not likely to happen again in the same fashion, right? It might be similar, there might be similarities, but as humans, we're always seeking these kind of patterns, these ideas of, I guess, what we want to see, right? Now, this is where a lot of people fall kind of foul. They fall into the echo chambers. Bitcoin's only going up. It's only going up forever. We've had 12 ETFs approved. We've had a multiplier on the Bitcoin price, and yet we are still, $7,500 under the old 69,000 all-time high. Right? These big players are not waiting and sitting on their hands for the halving to happen before they go all in. Right? Now, these are the kinds of things that you need to ask yourself. This isn't me saying, "Hey, this is what I think. This is what I assume." I've been very fortunate with my positions. I've been very fortunate over the years with crypto in general. For me, Forex is my bread and butter. Forex is my kind of daily go-to. In terms of crypto, it's a punt, right? In the kind of wider picture, I've talked recently about a couple of things, right? This is, I mean, to start with, I said about 135K. Now the assumption is 523K by 2025, right? Even if we were to draw this on the chart, 135K, right? This is what we were expecting back in 2021, right? Look at the difference. Now, as these markets evolve, as these markets just kind of move on, right? Not just evolve, as the markets kind of go on, these larger institutional players, they're not concerned about the time factor in the general sense, right? They're not looking for 100K by Christmas. These guys are looking at a fixed price return over X period of time, right? And I'm talking about 5 years, 10 years, 15 years, right? So don't get kind of caught into the trap of this is only going up because BlackRock and because this and because that, right? You need to understand a bit of logic. Now, one of the things we've discussed this morning, this is in the members area. This was actually going to be a members only video, right? And I kind of decided to put this out kind of to the wider audience. Now, one of the things we've talked about is kind of indecision, right? Now, as a professional trader, when the markets are not kind of in your favor, the markets are not giving you clear indication of up or down. You either go and look at a different instrument, you go and sit on your hands, you play some golf, you do some fishing. The reality is you take that time to relax, right? The market isn't clear enough for you to make money, right? Now, I've read a lot of different books over the years, psychology and this, that, and the other. And one of the things that really kind of stuck with me on this, right? I don't remember, I'm not an American, so I don't remember the guy's name, but it was to do with baseball, right? Now, in venture capital terms, baseball ultimately is one kind of hit out of 10 as a home run is kind of good enough. One or two hits in terms of just a decent kind of whack, right, is enough to give you a 7 out of 10 kind of ratio and still be profitable, right? Trading needs to kind of be treated pretty much the same, right? You don't need to hit 10 out of 10. You don't need to hit a home run on every 10 of the swings, right? What you're actually looking for is the longer term statistics, right? And going back to what I was talking about, this kind of venture capital type term, this baseball type analogy, was this particular guy had something like 3,000 swings in his kind of overall career for all the games that he ended up playing, and ended up something like 538 actual hits of the ball, with only something like 210 of these being some kind of home run, right? So the statistics were, again, 1 in 10 in essence, right? or just under 1 in 10. Now, the point of this is when you look at your own personal situation, the argument that I have kind of over and over again, right, is if you're only thinking kind of up and the markets only go up and gold is going up and the stock market's going up, the issue that you have over time is that when the markets do turn around, it's kind of a long time against you, right? Now, in crypto terms, people talk about diamond hands, which in essence means we never sell. Now, if the price has gone from 15 and you bought the bottom, right, you're stacking sats. If the price goes to 25, 35, 45, take some profits, right? This is how you make money, right? Paper gains are only paper gains until they become paper losses. The psychology sets in, and ultimately you end up with real losses, right? Now, one of the things we've discussed, and this is what I wanted to kind of put this together about, right, is if you understand there's various ways of making money, right? And especially in trading slash investing terms. Now, one of the things that I mentioned earlier was if you look at, where did I put this? If you look at a DCA type strategy, right? I'm trying to think where I put this. So this, for example, right? If you look at a DCA type strategy, if you take a smaller position, let's just assume at 60K, right? If the price goes up, you're in the money. If the price goes down, DCA some more into 50, right? But this doesn't mean kind of hold it and hold it forever. You see the GameStop saga. This is one thing I keep reverting back to. When I watched that movie, it was actually scary how silly and how stupid a lot of these people can be, right? If you look at the GameStop price right now, we're even lower than when that whole, thing happened. So in the grand scheme of things, nothing ever goes up forever and it won't keep going up forever, right? Now, a lot of people are talking about Bitcoin. For me, the biggest challenge, right, this is where I come into the charts, the biggest challenge is when we look at, this assumption that we were going to see 135K by the December this year, which was obviously closer there, right? That was the end of December, benefit of the doubt. This is what a lot of people are looking for, right? This is the kind of lottery type punt. This is the type of win that most people are dreaming about, right? Now, obviously, if you're looking to make regular money, you're looking to make a good income from trading or investing, creating your plan is more beneficial, right? Kind of having a plan in the first place is more beneficial. Diamond hands and oh, get wrecked is not really an answer, not really a comment, not really a statement in any kind, right? The idea of making money kind of time again is where being a professional trader, it's, that's the name of the game, right? So when we look at what we're currently doing, I've talked about a couple of scenarios, right? And hence the reason for me when I say things like no change, right? The reason I say no change is not there's no change in the price. And this is what a lot of people just can't seem to comprehend, right? It's no change to what I've actually forecasted 18 months before, right? We've talked about different situations. We've talked about different outcomes. We've talked about a 1, 2, a 3, 4, 5, right? This giving us a 1. If you look at the time factor from here to here, right? We're talking about 12 years, right? If we are looking to go to $1 million, we're looking to go to $5 million, oh, Bitcoin's going to infinity. Having an accumulation that lasts this long isn't actually enough fuel to take us all the way to the top, right? And these are the kind of assumptions that most people just they can't comprehend, right? This is where a lot of the the silly kind of comments come in. This is where, oh, it's ever going up, oh, you're wrong, oh, it's for me, I don't give a shit, right? I've been very lucky. I bought at the bottom, I've sold up the top, right? As far as I'm concerned, I don't care if it goes to $1 or $1 million, right? This for me is an instrument to make money, right? Now, in the grand scheme of things, if we look at the time factors involved in these, right? One issue that we have early doors is we've got this small accumulation, if this was an accumulation, right? If we then go from here and we've had a 1, 2, we'd have to assume with the internal nested count, right? Because you go 1, 2, 3, 4, 5, that we currently at a 3, right? Now, in Elliott terms, the problem that I have with this is that if we put a line on top of 1, when 3 comes in, 4, sorry, comes into the territory 1, we technically invalidate the count, right? So this particular point here is this is a very, very shitty bullish leg, right? Which means we go into a bear market, right? And this was the biggest fear. This was the biggest concern. I talked about this with Ryan on the Uncomplication channel. I talked about this being the triple top. And this is kind of the worst case scenario of the three scenarios that I kind of highlighted, right? And this is going back, like I said, 18 months or so, right? So, first option, first kind of idea was that if we were to accumulate down low, right, and we stay in the range a little bit longer, we actually finish this pattern off, right? And this is where I talk about the pattern. If we actually had the chance to finish the accumulation pattern, right, and something like this, then we would have had the fuel allowing us to go, kind of on a lot longer, right? We didn't. We actually had the fake news on the BlackRock ETF approval, right? We then basically reaccumulated in this position, and then we've kind of come up taking liquidity from the prior high, right? Which is a concern in its own right, right? This is a big issue in terms of what's fueling the next rally up, right? Now, to a lot of people who don't understand the technical analysis aspect of this, and they just buy in on the news, they kind of buy into the echo chamber, they're looking at, where this can go kind of indefinitely. The issue that they have is, diamond hands means they paper gains, so you're not actually making any money, right? If you've been lucky and you've gone and bought whatever the bottom was, I don't even remember what this was, if this was, 15,460, a lot of people bought at 15,461 if you retweet it. Obviously, with all these buys and all this kind of liquidity, the issue that you have is the liquidity that's left down lower in these gaps, right? In these areas of areas of interest. Now, if you look at a longer term strategy, so you're DCAing in, you're looking at taking these partial profits, you're looking at locking profits in, and so on and so on. Now, obviously, this is this is the best way for the longer term, but the excitement is kind of gone, right? The excitement is gone because the 6,000% gains you could make over here are now kind of not the same. For Bitcoin to double its value again at 60, go to 120K, there's an awful lot of effort required for that kind of price movement. Right now, we were expecting this, like I said, back in 2021. We still haven't doubled to 135K or beyond, and we're now in 2024, right? So this is just being, hyper realistic. Now, in the grand scheme of things, right, the first option that I had for this accumulation, right, would have been the optimal option. We didn't get it, right? And unfortunately, this breached, probably due to a lot of the news and the hype around that BlackRock move, right, which meant we invalidated the accumulation, the best of the three options. Now, the second option ultimately was the B, right? Now, we had a potential move 1, 2, 3, giving us an A. We then have a B, right? Now, in an ideal scenario, we'd have a 1, 2, 3, right? And this would have been a zigzag B, right? Now, a zigzag B ultimately would have been something like 50% through or 38% through to about 618 or 61.8% of that particular move, right? So the optimal area was around 48K realistically, right? And that was kind of the preferred option because that would have meant an A, B, C back down, right? Giving us basically a double bottom in the grand scheme of things, allowing us then momentum to go again for a much larger 3, right? That would have been a great 3 there, right? That would have been the optimal type of move again, right? So we've had the best case scenario kind of, fail. We've had the second case scenario out of the second option fail, right? We then go up. Now, this particular move, a lot of people say, "Oh, look, you're wrong. You said 48, and didn't short 48, right? This isn't the hey, this is where we go." And these are the kinds of options that you need to look at in terms of obtaining a bias, right? If someone said to me, "What's kind of next? Are we going to see 30K? Are we going to see 500K? What's first?" 30K is definitely first, right? There's no doubt about that for me. Okay. Now, what you need to understand is inside that particular option, the option of the B, you have the zigzag, you have flat. And this is why I don't trade the counter trend moves in Elliott terms, right? What I'm looking for is either the larger scale 1, 2, right? And then confirmation that we're about to go. Hence, If this was accumulation, we had the confirmation, entry would have been perfect, and I would have loved to have seen 200k plus, right? We didn't get it. Now, in this third option, or the second scenario, option 2 within the scenario, we have the various options of diagonals, flats, zigzags, right? And this is where it gets a lot more complicated in the Elliott sense. Once you've got a running flat option, right? I think I've actually saved an image of this. Let me just check if this is the right image. Let me get rid of some of these drawings as well. I'll put them back on if I delete too many. Actually, let's just delete them all, put them back on. So the option that you have, right, is this one here, right? Now, from a run-in flat perspective, if we look at the rules, B normally retraces 100% to 123% of the move, right? Now, I don't like this second part, right? This is why, for me, trading Elliott kind of counter trend moves, trading the corrective moves in general, so where it gets a lot more complicated. What I like with Elliott is that you've got 3 golden rules from the impulsive factor, and once you get confirmation that you're in one of these moves on a monthly scale, trading a weekly, trading a daily, it's a walk in the park, right? You take all the stress out of trading. Making money is just an easy, straightforward move, right? When you look at the running flat option, the option that you have from the running flat is 123% of wave A, right? So if I put this on and we assume this is now only the wave A, right? We can come up, we can come down. Now, 100% obviously takes us back to the high, right? So there's a tick in the box. 123%, which is this one here, is there, right? Now, what we can do is if we use this as a box, and then I'm going to put a date price range box on this, right? I don't have to do there. And I'm going to put a third line in the middle. I'm going to change this to white, right? There's the 50% marker of the 2 options, right? That for me is pretty close, right? Without putting magnets on and everything else. Now, the fact that this hasn't moved up in the impulsive situation, right? We've had 12 ETFs with a multiplier. These things are pretty scary, that when the price breaches above an all-time high, right? And not just in Bitcoin, this is just in the general sense. What you'd expect is people who shorted a position stops, right? Get triggered. So there's one. We've got a multiplier on Bitcoin, and BlackRock and all these massive ETFs are bringing in billions and billions and billions of dollars per day, right? And yet we rocket up to the old all-time high, and we go something like $4,000 above the all-time high. Are we seeing any similarities? People like to find patterns, right? Are we seeing any similarities in the percentages, the numbers, the value in terms of what we've done? Right? We've got gaps, we've got liquidity, we've got gaps, right? We've got liquidity. And there's an awful lot of money left on the table. Retail sentiment is all wrong. Halving is due, right? We've come up to liquidity and not really that much else. So when you put all this together, right, my preferred option of the 3 options is still currently, I say my preferred, the best option for retail right now is that this option, this version 2, this scenario 2, is the one that plays itself out, right? Because the third option is the most diabolical option of the lot, right? And the third option is the one that I've said triple top, and that's a big concern, that if this isn't corrective and we've actually gone up as a motive wave, right? And this is what I mean as being impulsive, then we have to assume that we start breaking down from that, which takes us into a much larger bear market rather than a corrective A, B, C down, which could put us into a bull market, right? And these are the major concerns, right? So for me, this option is still the preferred option, the better option. This is why I like, what I like on this particular move. I've covered this in a lot of detail. People obviously don't want to listen. People don't want to understand. People don't want to comprehend. Obviously, this is more, like I said, this was about to be a members only stream. I just wanted to put this out to that, wider audience. So I guess the bigger picture, right, and the bigger kind of concern is when you put the two factors that I've put together for you guys today. From an educational perspective, you've got the difference between trading and making money and investing and making paper gains. Right? You've got to understand how to DCA into a position if it's something like Bitcoin that you're looking for, right? And what I've talked about in this particular instance is not just Bitcoin, right? I've talked about this in a much larger play, right? I've talked about making a strategy, right? I've talked about how you map out the strategy, why you want what you want from the trade, right? Now, one thing that I mentioned in this, right, and this is where a lot of people in crypto tend to go wrong. I made quite a big trade in February that I put out publicly and showed kind of prior to the event, showed what I was trying to do, what I was looking for. And I look back at my words in terms of the message that I put there. And this wasn't, I'm looking for a 10x or a 100x return. My words were, I'm looking for a 1% punt on the news, right? So again, how you see the markets, how you think of the markets, right, is a different game. One thing that I suggest, and one thing that I've talked about in the last couple of months, is prop firm trading and so on and so on. Now, what you want to look at is if you have almost two accounts, right? One for these punts and one for these kind of lottery type tickets. There's nothing stopping you making a good little income from your prop firm trades, right? And I've just said, look, if you've got $100,000 in your prop firm account, right, this is, a relatively decent amount. It's a relatively early starting stage as a prop firm trader. 100K is, it's good enough for a lot of people who are still working the 9 to 5, right? You can make a decent amount of money from that type of account size, right? We're still only risking small amounts. For me, this takes out the risk out of your trading. This takes out a lot of stress out of your trading. What it allows you to do is to kind of have some pocket money on the side, right? Now, this is where a lot of people kind of fail to see how you can do the two. Right? So what I've suggested is, look, if you are trading with $100,000, $200,000, $500,000 account, then taking out, $500 to $1,000 for some larger term trades means that you could stick $500 into a shitcoin. You could stick 500 into a DCA into Bitcoin. You could stick 1,000 one month into SPX, for example. Following month, stick some into gold, stick some into a property, stick some into something else. The point then being is that these are the long-term trades, that whether they go up or down short-term, there's no stress involved because technically you're playing with free money, right? This is a massive factor from the psychology perspective in terms of becoming, a professional trader compared to a, degenerate type gambler. Now, all I'm trying to do and all I'm trying to show, right, is once you've got your larger scale bias, you can work out what part of the plan fits your own model, fits your own requirements, your own needs, right? When people said to me, "Oh, you didn't buy at 15K." No, I was buying down at $238 was my last entry. Why would I want to buy at 15K? Right? I'm still in profit at 15K. The point being is every individual is different, right? I've been in this game a very long time, right? If you're looking to make a little bit of money, then trading on a daily basis is it's all right? And it's definitely doable. Trading with a plan and a strategy is definitely going to point you in the right direction. If you're looking to make a one trade, one win type of deal with GameStop or Bitcoin, right? All I'm saying is be careful and understand where we are, bigger picture. Markets don't go up, go up, go up, and keep going up, right? Markets need to breathe. Market needs to, the pullback market needs these moves against the trend, right? Now, I'm going to finish this video off on the fact that, like I said, the three options that I talked about when I say no change, for me, best options off the table. right? The accumulation early on down low is gone, right? There's nothing to say that it doesn't happen again, doesn't restart again. But if it restarts again, that's on the back of a larger scale one, right? An A, a B, and a C, right? Putting us into a larger scale two. We accumulate sideways, right? Now, part of the reason that I think this is still plausible is regulation, right? If you read through BlackRock's prospectus document, which is basically their fund kind of outline in terms of terms and conditions, expectations, fees, and so on. They've mentioned 161 times regulation, right? Now, that's kind of a big thing, one in the industry in general, and two for someone like BlackRock to kind of highlight this as much as they do. So, regulation could easily put us into an accumulation, which again would be beneficial for the market, right? So, the fact that it could stay low for a year, 2 years, BlackRock don't care, right? BlackRock are making money on their fees, and BlackRock's kind of time horizon are 5 years, 10 years, 15 years. This is fund management kind of 101, right? So that's kind of the best option for Bitcoin right now. If we break up into this zone, right, we run the danger of that triple top, and that triple top being a impulsive move means that we've had an ABC, right, inside this. We've gone up for a massive one scale three after this being a two, right? And then we instantly invalidate that move by coming under the four underneath that one, right? So this is why I'm saying, for me, no change in the scenario. Running flat is the worst of the corrective options within this scenario. And I kind of pray that this is ultimately, for a lot of retail, the best outcome currently on the table. All right. So I'm going to leave it like that. Thanks for watching, guys, and see you on the next stream. Cheers up.